Hello traders, welcome back to my YouTube channel. Well, I have come up with another strategy for your trading. So in this strategy series, I'll be completing all the strategy and I will also giving you each and every strategy example and payoff graph as well, so that you can understand it very much better. So today we are going to understand the bear market strategies, means what kind of strategies we can apply if your view about the market is bearish. So in the bearish there are couple of strategies which you can apply. So I'll be limiting this video to one strategy only, and in my next video I'll be discussing another strategy. Well, if you've seen my last video in the same series, then in that last video I have shown you arbitrage strategies. Arbitrage strategies are different from our bearish and bullish market views strategies. So without wasting any time, let's dive into it and see what kind of strategies available for bearish market. If your view about the market is bearish, then these are the strategies: bear call spread, bear pull spread, long put, neg call, put back spread, short synthetic. So these are the strategies available if your view about the market is bearish. Now let's discuss bear call spread strategy, how it works, and what are the parameters which we have to keep in mind while applying this strategy. First of all, if you see, the traders are expecting that particular asset price is going to go down, and he doesn't want to take unlimited risk. He want to limit the risk and he want to limit the rewards. That's why he is using bearish call spread, then purchasing call options at a specific strike price while also selling the same number of calls with the same expiration date but at a lower strike price. So that will be the bear call spread. So that will be the definition, you can say. Now if you see here, then maximum profit to be gained using this strategy is equal to the credit. So in this strategy you are selling at the money call options. So by selling that options you are getting some credit into your account, means upfront money. So that amount will be your maximum profit, and maximum loss, well, you will have the almost same maximum loss. Okay, so it is limited risk and limited rewards strategy. We'll also be considering one current market example of Bank Nifty, because my view about the Bank Nifty is bearish and also I don't want to take unlimited risk. Hence I'll be discussing the strategy which I can apply in Bank Nifty as well. So first let's see this strategy. What we do, well, we sell one ATM, means at the money option, and we'll buy one out of the money options. Well, we are buying one out of the money options in case our prediction goes wrong and Nifty moves up instead of down, then we are buying the insurance. That's what I call insurance, means our security. If you see, then our market outlook is neutral to bearish. It means we are thinking that market will go down, or it will not go much down, but it can go down. So that's what our view about the market. Now let's see what is our motive. Our motive is to earn income with limited risk, and if you see break even at the expiry, it will be strike price of the short call plus net premium received. That will be our break even point. Don't worry about these terms. I'll be giving you one perfect example of current market scenario, and I'll be also be showing you the payoff graph of that strategy. Well, what is the risk? Well, difference between the two strikes premium received, that will be your risk. And what will be reward? Well, limited to premium received. And if you see the margin required, definitely you are selling options, hence you will be needed some margin as well. Now let's see where we can apply this strategy. So if you see here, then Bank Nifty current spot price, if you see the current spot price, it is 30,700. Then we'll sell at the money options. So at the money options we are selling, it is 30,700, and we are receiving some premium which is currently 323. And if you see, then we are also buying one out of the money call strike price of 13,900. So 200 points above we are buying. And if you see here, then how much premium we have paid? Well, we have paid 231 rupees for that buying of that options. So now if you see where our break-even point will be, it is 30,792. Well, what we did actually, if you wanted to see the break-even point of any strategy, then here I'll be giving you an example. You are selling 30,700 and here you are receiving this premium, and that much you will be paying. premium received minus premium paid. So if you do this minus this, then whatever amount you will be getting, that you have to add in 700. So that amount will be 92. Our break-even point will be 30,792. Well, what is the lot size for Bank Nifty? It is 25. And net premium we have received is 92. That's what I was telling. So if you add this 92 into your add the money option, then you will be getting your break-even point. So what will be our profit? Well, net premium received into 25. That will be your maximum profit, and that will be 2300 in this case. Now this is the calculation. So I have shown you a mota calculation. Now I'll be giving you a deep view, means at what strike price how much payoff is there for each of the strike price premium. If you see here, then this is the payoff. If market will go down as expected, then definitely we are receiving 323. We'll do the minus of minus 231, and whatever amount will come, we'll multiply it by 25. Then we'll be getting our profit. So if market goes down as expected, then definitely we'll be receiving this premium in our account. And also we'll be losing wherever we have bought the call. So out of the money, call money, we'll be losing. But ultimately, if you do the minus from this value to this value, or you can add here, because I have already put the minus sign. So if you add this 2, then definitely whatever amount you will be getting, that will be 92. So if you multiply 92 by 25, then you will be getting 2300. So that much net payoff you will be getting if Nifty moves down from 30,700. What about if Nifty moves up? Then if Nifty moves up, then definitely this value will reduce. Means you have solved the option. So now that will start giving you losses. So how much losses it will be giving you at each strike price? Means if it moves from 30,700 to 13,800, then it will be giving you 223 points loss. If it moves from 30,700 to 30,900, then it will be giving you 123 points losses. Means like that much point losses will be occurring if it will move down. So first you will be getting 323 rupees. If it moves 100 points up, then you will be getting 223 rupees only. If it moves another 100 points, then you will be getting 123 points only. So we have bought 30,900 premium. So which is minus 231. So if Nifty goes down, definitely we'll be losing this premium. But if Bank Nifty goes up, then what will happen? Definitely we'll be gaining on this. So here, if it moves 100 points above this 30,900, then we'll be gaining 131. If it moves further, then we'll be gaining 31. So wherever we have solved the call at the money, that was giving the profit if Bank Nifty will move down. If Bank Nifty will move up, then definitely our premium received will become debit at the end of the trade of expiry date. And this buying the options will start giving us some profit. So that will neutralize the trade. Means we are limiting our risk instead of putting stop loss. So this is the bear call spread. If you wanted to see the graph, I can show you here. On this y-axis, this is the profit which you will be getting. So on this x-axis, I have shown you all the strike price where Bank Nifty can move. Now let's see. If Bank Nifty move below 30,800, then we will be getting 2300 profit. If Bank Nifty moves above 30,800, then we will be losing minus 2,700 rupees. So that is the payoff graph. And how I have calculated? Well, I have calculated based on this table. Here you can see this table. This is our x-axis. So it is giving us the strike price. And this is our payoff. So this is our profit or loss. It is on the y-axis here. That's it guys for today's video. If you found this video helpful, then hit the like button and consider subscribing to this channel.